Hello and welcome to the BNP Paribas Asset Management Talking Heads podcast. Every week, Talking Heads will bring you in-depth insights and analysis through the lens of sustainability on the topics that really matter to investors. In this episode, we'll be discussing fixed income ETFs. I'm Daniel Morris, Chief Market Strategist, and I'm joined today by Luca Pagni, Portfolio Manager. Welcome, Luca, and thanks for joining me.
Thank you, Daniel. It's really a pleasure to be here.
Luca, we think about the astounding growth in ETFs and in passive investments in general over the last many years now. But one thing that's been a change are the different types of ETFs that are available to investors and their popularity. We've seen a lot of evolution over the years, particularly around fixed income, which initially was seen as more challenging to present in an ETF form, but the industry evolves and comes up with creative solutions. So could you talk a bit about what you've seen in terms of the success of fixed income ETFs and what you think is behind it?
In recent years, the fixed income ETF have become an essential tool for asset allocation. And this is also due to the steady growth in product offering. There are a few reasons behind this success, really. First, it's important to observe that most bonds are not traded in the stock exchange like equities are. Bonds are generally traded over the counter, which makes them less accessible to the general public. Fixed income ETF directly solve this problem by making bond investment available in the same market where shares are listed. So it's much easier for the general public to reach the bond investment. The second fundamental advantage of fixed income ETFs is the diversification they provide to the investor. This level of diversification is really difficult to achieve in the bond market. Just think about the fact that to buy a single bond, most of the time you need at least 100,000 euros because that's the minimum denomination. So if you want a decent diversification in your portfolio as a private investor, that's going to be challenging. On top of that, some of the segment of the bond market also present very low liquidity, and it might be challenging for the individual investor to put money into them. ETFs offer diversification that solve these two issues, and this is no matter the size of the investment that you have to put into that market. Another critical factor for us is liquidity, and there are multiple ways that this is achieved. One of these ways is the use of portfolio trading. Now, portfolio trading is a technique whereby you trade a basket of bonds rather than individual lines of bonds. The trade is more efficient and also less costly. It's cheaper from a trading cost point of view to trade the ETF rather than the underlying securities. It's a very important attribute and advantage of these products over investing directly in single bonds. Finally, I would say that it's interesting to notice that major index providers like, for example, MSCI, are entering now the bond market in terms of index production. They really see big growth potential.
Can you go into a bit more detail about some of the evolutions, some of the innovations that you're seeing within fixed income ETFs?
Fixed income ETFs have grown in diversity in the recent year, and they are now really offering a wide range of strategies and market sector to the investor. An investor can now select ETFs on all the relevant bond market segments, such as government, emerging market, corporate, and this is across different rating, profile, and maturity profiles. One of the recent development is thematic bonds. We all know thematic bonds such as green or social bonds that now can be accessed also with dedicated ETFs. Fixed income ETFs is expanding into more illiquid and hard-to-reach segment of the market, such as Chinese or Indian bonds. Another notable development is in the introduction of fixed maturity ETFs. Those are products that offer a diversified exposure to a certain bond market, but with a final maturity date. The fixed maturity fund behaves like a normal bond with decreasing duration over time. And this allows investors to lock in attractive yield while still diversifying away individual credit risk, which is a key element, as we said before. And it's interesting to notice that 1/3 of the new issued fixed income ETFs that were issued in Europe in the last 18 months were fixed maturity ETFs. Let me finish with another significant evolution, which is the growth of actively managed ETFs. You know that ETFs are generally considered to be passive products, so vehicles that are used to replicate a market performance. But the recent launch of actively managed ETFs highlights the fact that ETF can be a vehicle for strategy that have also the aim to outperform the market.
You've talked, Luca, for example, with these active ETFs, how the portfolio manager can add some value to the product and take it beyond just what we call plain vanilla ETFs, where it is very much 100% passive. Can you maybe talk about some other techniques, shall we say, that portfolio managers use to add value to the ETF product?
Replication should not be considered as a completely passive way of managing a portfolio. This is a very important point for us as portfolio manager in this space. ETF portfolio manager can employ various techniques to improve replication beyond the simple mirroring of index composition. And the way we approach ETF management today is more proactive than it was in the past. Our aim is always to reduce as much as possible the tracking error toward the index, but also we can add goals like reduce the transaction cost, reduce turnover, and improve the liquidity of the portfolio. And we have various tools at our disposal to do this. For example, we can participate in the market for new issues in anticipation of their inclusion in the index. Another example of proactive management is how we trade the daily inflow and outflows in the fund. We are now much more attentive to market positioning in each individual bonds, and we can capitalize on this information when we adjust the portfolio. In essence, when selecting the bonds we want to trade, we can favor those with strong market buying interest and reduce those that have large selling pressure, for example. We can have the goal of reducing turnover in the portfolio, improving the liquidity of the portfolio. In this way, we can improve resilience and reduce the transaction cost. And finally, one of the source of portfolio technique improvement is the need to respond to certain clients' concern. Take, for example, the fact that ESG integration into portfolio has been one of the most important themes in the last few years. ESG integration can impact the performance of the portfolio compared to the broad market, and ESG portfolio may lag or even outperform a broad market. So to address this issue, we launched a sustainable range of fixed income ETFs. These products have superior ESG profiles compared to the market they follow. All these innovation in ETF investment management are challenging and exciting for us. I think that they demonstrate the flexibility and capability of portfolio managers to meet clients' needs in an effective way, and even in a space where you think that the portfolio management is relatively passive.
Thank you very much, Luca. If I could summarize the key points, you really highlighted how the success of fixed income ETFs has come because it solves a problem that a lot of investors face if they wanted to buy individual bonds. If you purchase an ETF, you get access to diversification at a much lower price than might be the case otherwise. When you talked about the innovations that you're seeing in the space, one that I thought was quite interesting were the fixed maturity ETFs, where you now take an ETF and the characteristics of a standalone bond, where you do have a fixed maturity and declining duration over time. And then finally, where you, as a portfolio manager or asset managers, add value to the management of ETFs. Well, Luca, thank you very much for joining me.
Thank you very much.
That's it for this week's episode of Talking Heads. If you would like more information, please reach out to your BNP Paribas Asset Management contact or check out Viewpoint, our website for investment insights at viewpoint.bnpparibas-am.com. Just before we go, I'd like to mention that the Talking Heads podcast is available on YouTube. Visit youtube.com/bnppam/playlist and tap or click on Talking Heads. You've been listening to the BNP Paribas Asset Management Talking Heads podcast with me, Daniel Morris and Luca Pagni. Please do join me next week. Until then, take care.
This presentation includes a discussion on current market events and is not intended as investment advice or an offer of products or services by BNP Paribas Asset Management. Please keep in mind that the information and analysis in this presentation is only current as of the publication date.